Hello. I am not qualified to give financial advice. Is TurboQuant actually bad for SanDisk? Today we're checking how the markets reacted to the Google unveiling of TurboQuant and whether it's an overreaction, and we'll go into the fundamentals after we check the charts, see what's going on a little bit. That's the RSP. Google SanDisk. Vector quantization is a powerful classical data compression technique that reduces the size of high-dimensional vectors. So let's go through the charts. I'm going to cover a few charts here today. Let's take a look, and then we'll get to the fundamentals. So the SPY, the S&P 500, below the 200-day, higher than average volume down here, which still have a way to go to the previous highs from last year, panic another 3% potentially, but we are seeing a reaction at these levels here because it just sold off so hard. But I mean, realistically, it's still just a bearish retest of the low in late November of 2025, which a lot of people probably got shook out around here as we continued to go sideways for another 150 days. Well, anyways, we've been around the same level for 200 days. Okay, so we got a reaction. It's going up a little bit. Will it continue? Will it sustain? Will it go back down? Is this a bearish retest of the break of support, the previous low? The equal weighted S&P 500, the RSP, is breaking out apparently of this trend line, but we are still in a downtrend on the daily chart. However, the weekly is probably an uptrend. Oh, yeah, the weekly is still in an uptrend above the 50-week. However, we lost the 10-day and the 20-day, but they are still above each other. Let's look at the charts now. So if we look at Google, we can see, my messy lines everywhere, but huge reaction. It was looking really bad, but it was at the 200-day, and a lot of institutions just buy at the 200-day. But I think Microsoft and stuff, they lost the 200-day. So if you do that with everything, it may not always work out. Hey, if this is Google, this is one of the top quantum companies. It's one of the top companies in the world. And like in the future, it's a very important company, like with quantum computers and stuff like that. They have an algorithm that may come out in 2029 that could crack like Bitcoin, but Bitcoin would just have to update the wallets, update the code. It's one of the most legit quantum companies out there. Okay, so let's take a look at SanDisk. We finally got a reaction after it fell 20%. 30%, 27% from its highs down to the 50-day. Reacted to the 50-day last time, but here we are. Again, reacted to the 50-day. It's coming back up to this line. Will it hold? Well, there's a lot of sell pressure over here for the next 8%. And the Q moving average is starting to turn red. So, it's been on one heck of a run. Still above the 30-week, still above the 200-day from when it split from Western Digital in February of 2025. It's been up 1,352%. Even just this year, after this base formed, triple bottom up to the 50-day, 150%. And now it's basing again. But is this a bearish pattern? We're going to continue higher, double our value again? Could happen. We'll talk about the fundamentals later. When it became more efficient to do video compression, more videos were allowed to come out, and we got stuff like Netflix and YouTube. Realistically, being more efficient with those algorithms will cause another boom, or potentially make everything more efficient, which could then drive the need even higher. Even like one model update, we might be back to where we were. AI is huge. This is like the industrial revolution, but with artificial intelligence. Western Digital, take a look here. We got 50-day. It's holding. It's holding 15% to the previous highs. Been on quite a run this year. Only up 60%. So SanDisk is like a leverage play of Western Digital. That's who they broke off from. So from February 2025, SanDisk is up over 1,000%, whereas Western Digital, lost like 40%, but now it's up only 500%, 400%. Micron technology looks pretty fucking bad, if you ask me, because I drew this trend line a long time ago, and it's bearishly retesting it. So I don't know how valid that is. It was some kind of support line from a long ass time ago. Let's take a look what it's from. Oh, so I was drawing down here, it looks like. Way back here from 1997 is what I'm basing this off of, so who knows how valid it is. That was a support level that it lost in 2007. It lost 80% of its value, and it's been trying to catch back up to it ever since. 4,000 days, and then it broke out here, held this thing, and bang. That's from 1997. It started breaking out of that, and then got rejected, so it's on a tear, dude. I could see it going up another 60% if it recovers and stuff. If there's like a huge market crash, maybe it'll go way back down. I don't know. Yeah, that's Micron. Take a look at Seagate Technology holdings. Based on this questionable line, it went above it, went down below it, and now it's going back above it. This order block for the previous high be about 10%. Storage company. The Nasdaq 100 looks like this. It looks like this. So we went down to that order block and it reacted, and now we're up 2%. The previous highs would be about 10%. So this could be where it turns around, or maybe it'll consolidate, or who knows what'll happen. Who knows? So I would wait for like a breakout or something. I don't know. Just staying in cash is fine too, but depends on what way you do it. I'm not qualified to give financial advice. This is Amazon looking pretty bad, but this might be where it turns around because you see this, it's getting above that line. 10%, 40%, 20%, I don't know. But it's the same price as it was in 2025 right now. And it's all like choppy looking. It's not even. But this could be the bottom area where it reacts. I mean, it's Amazon. You probably bought something on Amazon recently, right? Microsoft. Bill Gates is in a lot of trouble, man. He's getting dunked on with his Epstein ties and, the vaccines, the global health stuff. Probably shouldn't talk about it here. But yeah, that's, I don't know how accurate all that information is, but there's a lot of information coming out and people are mad. Economic people are speaking out about it too. So I don't know, but this is where the order block is. We do have a line here that it broke. So that's pretty bad. So I don't know, man. But if you buy here and it goes to its previous high, it's a 50% gain. Pretty nice. Here's Meta, the Facebook social media platform. It's highly addictive according to the courts. I agree. It's pretty addictive platform. S&P 500. So here's the RSP, the equal weighted ETF. We already looked at. All right, so that's it for today. Stick around for the fundamentals, and I'll go through the research paper on their blog of the new Google TurboQuant vector quantization high dimensional vector. It reduces the size of high dimensional vectors, and that's what the whole thing was about. We'll go into that. I can talk about that later at the very end. Okay, and I'm not qualified to give financial advice. Is TurboQuant actually bad for SanDisk? I am not qualified to give financial advice. Google broke memory stocks for about a week. Last week, Google published a research paper. The stock market looked at the paper, decided that flash memory was now worthless, and proceeded to erase about 20% of SanDisk's market cap over 5 trading days. Then today, it started coming back. I am not qualified to tell you whether that was correct, but I can tell you what happened and let you form your own conclusions. Let's talk about TurboQuant. First, a quick orienting fact. SanDisk is not a new company. It's been around since 1988, but as a publicly traded independent entity, it's relatively young. It only reemerged on its own in February of 2025 after spinning off from Western Digital. The spinoff allowed it to focus entirely on flash memory, specifically NAND, without being dragged down by Western Digital's legacy hard drive business. Wall Street loved the story. By mid-March 2026, SanDisk stock had surged nearly a 158% year-to-date. The thesis was simple. AI needs more storage. SanDisk makes storage. Math is math. The company's CEO was guiding for NAND to be undersupplied through the end of 2026, with customers already locking in conversations about 2027 supplies. Fabs were running at full capacity. Data centers were projected to overtake mobile as the largest NAND segment for the first time ever. Everything was going great. Then Google held a summit. What Google actually did. On the morning of March 30th, during something called the AI at Scale Summit, Google announced a compression algorithm called TurboQuant. Here's what it does in plain terms. When a large language model is running inference, meaning when it's actually responding to you, it stores a bunch of temporary data in what's called key value cache, or KV cache. That cache lives in memory. It's one of the biggest consumers of NAND and DRAM in AI data centers. TurboQuant compresses that KV cache down to 3 bits without retraining the model and without meaningfully degrading accuracy. The headline claim from Google's own research paper, at least 6x memory reduction up to 8x speed up, 0 accuracy loss. That's the number the market heard 6 times, and it reacted accordingly. SanDisk fell 5.7% on Wednesday when the news broke, then fell another 11% by Thursday. Micron dropped around 10% on Monday. Western Digital, Seagate, everything in the memory sector got hit. This happened while the Nasdaq 100 was actually up. By the end of the week, SNDK and MU had each dropped over 17% from their pre-announcement levels. Several Tier 1 banks downgraded their entire memory sector from overweight to neutral, citing a structural shift in AI capital expenditure towards software optimization over hardware accumulation. Now, one thing worth noting, SanDisk was hit harder than Micron, and there's a structural reason for that. Nearly all of SanDisk revenue comes from NAND. Micron is more diversified. Only about 21% of its revenue comes from flash in Q2. DRAM and HBM, which Micron is heavily exposed to, were considered largely unaffected by TurboQuant. So the market's logic was, Google just made NAND less necessary. SanDisk is almost entirely NAND. Therefore, sell SanDisk harder than you sell Micron. That logic is not irrational. Whether it's correct is a different question. The bull rebuttal. Why it's bouncing. Today, March 31st, memory stocks are bouncing. SanDisk was up over 10% at various points. Micron and Western Digital also recovering. So what changed? Probably nothing in terms of new information. What changed is the analysis started pushing back on the bear case and the market started listening. Here are the three main arguments. Argument 1. TurboQuant is narrower than the market priced in. Morgan Stanley's analysis, Joseph Moore, maintained buy ratings on both Micron and SanDisk, with price targets of $520 and $690 respectively. His specific note, TurboQuant's reduction applies only to the KV cache portion of memory, not to memory overall. The market treated it like Google had compressed all memory demand by 6x. That's not what the paper says. Argument 2. The Jevons paradox. This is the idea that when something becomes more efficient, total consumption of it tends to go up, not down. The historical example is coal. When steam engines got more efficient in the 1800s, Britain used more coal, not less, because efficiency unlocked new use cases. The argument here is, if TurboQuant lets you run a model that used to require 96 gigabytes of memory on 16 gigabytes instead, developers won't run the same model more cheaply. They'll run a model 6 times bigger, or 6 times more of them. Memory demand doesn't go down, it gets rerouted into new capability. Argument 3. The fundamentals haven't moved. SanDisk guided for up to $4.8 billion in revenue this quarter with a 66% gross margin. The stock, even before today's bounce, was trading around 25x forward earnings, lower than most leading AI names in 2026. 38 of 43 analysts are still at buy or higher. The underlying order block hasn't changed. The honest uncertainty. So here's where we actually land. The bear case is not stupid. If TurboQuant gets broadly adopted not just by Google internally, but by hyperscalers across the industry, and if context windows don't keep expanding fast enough to eat up the efficiency gains, then yes, demand for NAND could soften meaningfully. The bull case is not that stupid. Lab benchmarks rarely translate one-to-one in production deployment. The algorithm hasn't been formally peer-reviewed in a conference setting yet. TurboQuant is scheduled for ICLR 2026, which is the first time the broader research community will be able to stress test the claims. And AI context windows have been expanding so fast that 6x efficiency gain could get swallowed in a single model generation. What we can say with some confidence, the market's initial reaction, a 17 to 20% drop in 5 days while the broader Nasdaq held up, was almost certainly an overreaction to a narrow technical paper that was being read as a death sentence for an entire hardware category. Whether today's bounce is the start of a V-shaped recovery or just a brief pause before the market reassesses further, I genuinely don't know. Nobody does yet. The real test is what the other hyperscalers do. If Amazon, Microsoft, or Meta start publicly adopting TurboQuant or rolling out their own versions, that's when the structural thesis gets pressure tested. Until then, SanDisk fabs are still sold out. Customers are still booking 2027 supply, and the stock is still up over 100% year to date, even after the dip. So that's TurboQuant, that's SanDisk, that's the week in memory stocks. I am not qualified to tell you what to do with any of this, but I hope it was useful. Like and subscribe if you enjoy watching people explain things they are explicitly not credentialed to explain. See you next time. And remember, I am not qualified to give financial advice. Okay, so instead of just taking my word for what this paper says, let's actually look at it. This is the Google Research blog post. TurboQuant Redefining AI Efficiency with Extreme Compression. It was posted on March 25th, 2026. The underlying paper was actually first uploaded to Arxiv back in April 2025. It's been sitting in academic review for about a year. Google chose to promote it publicly now ahead of its formal presentation at ICLR 2026 in late April. ICLR, for context, is one of the most selective machine learning conferences in the world. Getting accepted there means the paper passed peer review from people who actually understand this stuff, unlike me. What problem is it solving? The paper opens by framing the problem is trying to solve. When you're talking to an AI, any large language model, the model needs to keep track of the entire conversation context as it generates each new word. It doesn't reprocess everything from scratch every time. Instead, it stores a running record of what it's seen in something called the key value cache, or the KV cache. Think of it as the model's short-term memory working memory for a session. Every token it processes gets written into that cache, and the longer the conversation or the bigger the context window, the larger that cache gets on GPU memory, which is expensive and finite. The standard precision for storing KV cache data is 16 bits per value. TurboQuant's claim is that it can compress that down to 3 bits. Same information, a fraction of the storage. How it actually works, the 2 stages. The blog explains that TurboQuant does this in 2 stages, and I want to walk through both, because the reason this is technically interesting is that most compression methods have a hidden cost that partially cancels out the gains. TurboQuant claims to have solved that. Stage 1 is called polar quant. The core idea here is the coordinate transformation. Instead of storing data in standard coordinates, your XYZ, polar quant rotates the data randomly and then converts it into polar coordinates, a magnitude and a set of angles. After that rotation, the distribution of those angles becomes highly predictable. Mathematically, it concentrates around known values. Because the shape of the data is now predictable, the system doesn't need to store expensive normalization constants alongside every data block. That's the overhead that kills most other compression methods. They compress the data, but then they have to store metadata to decompress it, which claws back 1 to 2 bits per value. Polar quant eliminates that overhead by design. Stage 2 is called QJL, Quantized Johnson-Linderstrass. This is the error correction step. Even after polar quant, a small residual error exists. QJL takes that leftover error and applies mathematical technique called Johnson-Linderstrass transformation, which shrinks high-dimensional data while preserving the essential distances and relationships between data points. It then reduces each resulting vector number to a single sign bit, just a +1 or -1. That's it, 1 bit, and that single bit is enough to eliminate the bias and the remaining error, which is what lets the system maintain accuracy at such aggressive compression levels. So the full pipeline is rotate the data, compress it cleanly into polar form, and then apply a 1-bit error checker to the remainder. Total output 3 bits per value, down from 16. No retraining required, no calibration data needed. It runs online, meaning it processes each vector as it arrives in real time. Google tested this across 5 standard long context benchmarks. The benchmark results. Google tested this across 5 standard long context benchmarks: Long Beach, Needle in a Haystack, Zero Scrolls, Ruler, and L-Evil, using open source models including Gemma and Mistral. The results they are reporting: at least 6 times reduction in KV cache memory, with what they're calling zero accuracy loss across all tested tasks, including question answering, code generation, and summarization. There's also a speedup claim. The blog shows a chart. 4-bit TurboQuant achieved up to 8 times performance improvement in computing attention on NVIDIA H100 GPUs compared to the 32-bit unquantized baseline. That's a different metric from the memory compression. That's raw compute speed on the attention mechanism, which is one of the most expensive operations in inference. Within 24 hours of the blog going live, independent developers were implementing it from scratch, not using Google code, but because Google hasn't released any publicly yet. One developer tested it on a Gemma model on an RTX 4090 and reported character identical output to the uncompressed baseline at 2-bit precision. That's a remarkable independent verification if it holds up. What the paper doesn't claim, the honest caveat. Here's what I think is important to say while we're actually looking at the paper, because this got lost in stock market reaction. TurboQuant compresses the KV cache. That's it. It does not compress model weights. It does not affect training. It does not touch DRAM used for other purposes, or HBM used in GPU stacks for model parameters. It is a targeted optimization for one specific bottleneck in one specific part of the inference pipeline. The paper is also very clear that this is a research result, not a deployed project. There is no production implementation from Google. The formal peer review happens at ICLR in late April. The open source code hasn't been released. The question of whether this gets integrated into frameworks like llama.cpp or OLLAMA, the stuff that actually runs at scale, is entirely open. The market heard 6 times memory reduction and sold SanDisk 20% in a week. The paper says 6 times KV cache compression in research benchmarks on 2 open source models pending peer review with no production deployment. Those are not the same sentence. I am not qualified to give financial advice.